Headed to SoFi Stadium? Skip the traffic and ride the Culver City Bus Line 99, the SoFi Express, your direct $2 base fare round-trip ride from the Culver City Transit Center at Westfield, Culver City. Buses run on weekend game days every 20 minutes starting 3 hours before kickoff, with return service beginning at the start of the third quarter. And guess what else? We're hiring. Join our team and help keep the community moving. Visit culvercitybus.com or call 310-253-6500 for info on your next ride to the game or maybe your next job.
Good afternoon. We're getting right down to business here, doing it live, doing more at 4 weekday afternoons, right after Guy Benson and just before the 790 KBC News Blitz with Randy Wang at 5, Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com, and your on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all your favorite podcast platforms. The big enchilada, the monthly economic reports came out this morning, and it was a disappointment. Stocks pulling back from record highs following the release of the weaker-than-expected jobs report for the month of August. The report come out today from the government ahead of the opening bell on Wall Street was weaker than expected, showing hiring at just 22,000. The expectation was 75,000, and the nation's unemployment rate did tick higher to 4.3% from 4.2%. In reaction, stocks moved lower and bond yields pulled back. That's why mortgage rates slipped today. The yield in the 10-year note back down to 4.07%. So that's one silver lining there. Mortgage rates did come down. We also saw the price of gold move higher today at more than $33, and it's above $3,600 here, hitting record highs this week at $3,639.80 an ounce, up 33.10. Silver is hovering just below $42 an ounce, and platinum, which popped above $1,400 earlier this week, is hovering right now at $1,382 an ounce. Crude oil futures coming under pressure today, down $1.51 at $61.97 a barrel. More good news for consumers there. Looks like average hourly earnings rose 0.3% over the past month and 3.7% over the previous year as of August. That was part of the report out today. The report out today follows the private payroll provider ADP survey showing 54,000 private sector jobs were created last month. The Labor Department showed initial filings for unemployment insurance tallied 237,000 last week, the most since June. We also got a new report showing that manufacturing has also slipped. The Institute for Supply Management showing the ISM Manufacturing Index pulling back again, marking the sixth straight month of contraction. That's important because Los Angeles is the largest manufacturing region in the United States. Nervous time for retailers and consumers, with retailers like Walmart, Target, and Best Buy saying in recent weeks that some tariff-related increases are starting to creep into the cost of groceries, home goods, and electronics. We'll talk tariffs and taxes and the latest in Washington with Grover Norquist, president of Americans for Tax Reform, who'll be joining me live later this hour. Corporate merger activity is picking up, and so is the entrepreneurial spirit here in Southern California. I'll talk about that with a giant on the local M&A scene as well as a master entrepreneur. I'll be joined live later this hour by Lloyd Greif, the CEO of Greif & Company Investment Bank, whose name is on the Lloyd Greif Center for Entrepreneurial Studies at the USC Marshall School of Business. Lloyd Greif set to join us live later this hour. But first, on your money, the markets, the economy, and the whole works now. Joining us live, Jonathan Honig, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan Honig, thank you very much for coming to the line this afternoon.
Frank, I'm delighted to be with you, although I'm very disappointed in that jobs number we got this morning. As you said, look, the unemployment number was up 4.3%. This is the highest rate in nearly 4 years. And, you know, the job market had been one of the stalwarts of this economy for years, just like the Mag 7. And the fact that unemployment is really now starting to become a real issue for this economy, I don't think necessarily bodes well in the months ahead for stock prices.
All right, we're coming off an all-time high here for the S&P 500. The S&P 500 slipped to 21 points off its record high achieved yesterday. The Dow down 220. Still above 4,500, 400 here, and the NASDAQ down 7 at 21,700. The S&P 500 just a whisker below its all-time high. The other averages still near their recent record highs. Is the record run over here, or what do you see ahead for the market?
Well, look, I am a technician at heart, Frank, and all-time highs tend to beget more all-time highs. So when you look at an asset like gold, for example, I think that's true. I do think we see higher highs in gold, but the fact of the economic reality is that the tariff cost has been largely borne by producers up to this point. And John, this is the type of economic policy that's going to cook companies like John Deere and eventually companies like Walmart as well, as they ultimately can't hold off on passing these costs along to customers. So I think the tariff issue is not going away. I think President Trump is going to insist that it remain and that it in fact increase. So I'm cautious. It's too much uncertainty, and it's why I think you got to spread your wealth around away from the S&P 500. Truly time to diversify beyond those familiar big caps.
All right, we're on the air live with Jonathan Hoenig. And Jonathan, of course, NVIDIA has been in the spotlight since its earnings news hit a record high recently. We've got to mention the Magnificent One, since every conversation involves AI nowadays. NVIDIA pulling back from its recent high here. I'll pull up the quote here. It was down nearly $5 today at 167 and change. What about the most important company in the world, we're told, the most valuable, and the Magnificent One, no less?
Well, and Frank, and you're a student of the market, and they're so knowledgeable about the market. You remember when that good one was Kodak, perhaps Eastman Kodak back in the day, or Cisco Systems in the late 1990s, or Nokia for a while was that company. So these come and go, and rather than looking at the biggest company, one name that I was on my screen this morning was FDM. That's Frank as in F as in Frank, D as in David, M as in Mottek, FDM. This is the market's smallest stocks. These are the micro cap stocks, the real small names. They've broken out to new all-time highs. So, Frank, I'm always trying to find those trends that aren't necessarily being talked about. NVIDIA, a great company, but stretched valuation. And the fact that the small caps are starting to break out, to me, that's where I'd be putting my money. Names like FDM, and I do own that one over at capitalspig.com.
All right, and thanks for making it easy for me to remember that one, Jonathan Hoenig. And going down the list here, Tesla back in the news. It looks like the Tesla board trying to make Elon Musk a trillionaire, trying to hold on to him. What about Tesla here?
Well, what I find so ambitious about Musk's comments is his willingness to reinvent the company. He's really emphasizing the fact that Tesla is turning itself away from being a car company. And that's at a time that we're seeing, the margins that EV companies have enjoyed for years now really starting to compress. The return on Tesla, Frank, has been, quite amazing, the highs and lows. It's up about 33% just since March, and up 52% in just the last year. So, Elon is a very polarizing figure, but when you think about the technology that he's created, I always make the joke that, he's has this rocket that can blast up to space and come land exactly where it took off. And yet when I go to the shopping center and I come out, I don't remember where I left my car. It's such amazing technology. In fact, the stock is actually looking to break out around the $350 level. So wouldn't short Tesla here. It's not in my portfolio, but wouldn't bet against this genius, Elon Musk.
All right, hard to ignore the movement in bond yields lower today, sharply lower in reaction to that jobs report. And we've seen the bond market making news this week here as well as in other places. What are your thoughts about that, and what should investors be paying attention to there?
Well, it's almost a tale of two bond markets, Frank. We hear the president talking about the need to lower interest rates. The Fed controls the short end of the curve, and the long end of the curve, the long-term bonds, not just in the U.S., but globally, have really risen. I mean, the U.S. 30-year hit 5% in the last couple of days, hit it twice earlier this year. And globally, whether it be in the U.K. or in Germany or in France, you're really starting to see those so-called bond vigilantes rise once again. So we're seeing a steepening of the yield curve, but I think the message is pretty clear. Whether it's higher long-term yields or higher gold prices, I think inflation is a story that we're not going to see go away. I know the president wants to take a victory lap about inflation slowing, but a lot of what we're seeing economically in the market suggests that that's simply not the case.
Mercifully, the price of oil is in the low 60s here. That is certainly helping the inflation situation. But as you note, there's nervousness about the tariffs, and we've been hearing from the retailers about possibility of the tariff increases passing ultimately to the consumers. So we're definitely paying attention to that. It looks like the markets are too. I know you follow what's happening in the cryptos these days. We speak to the biggest fans here as well as the harshest critics and everyone in between. We see Bitcoin off its recent all-time high, which was above 124,000. Right now it's around 111,000. What are your thoughts on crypto here and the crypto-related equities that have been getting so much attention?
I mean, they have been, Frank. They really have been. Crypto has become mainstream, especially with the adoption of so much legislation in Washington that has really brought crypto mainstream. And, I'm not a hater, but I can't say that I invest for my clients in Capitalist Pig in crypto. What I'm worried about is something not unlike what we saw with cannabis stocks. Cannabis stocks are way down from where they were 4 and 5 and 6 years ago. And, what's happened over that period of time, we've had more and more cities and counties and states adopting marijuana usage. I mean, the sales are higher, but the valuations have contracted. So that's really my fear about that sector is that even if you see the expansion of crypto, more use of crypto, more adoption of crypto, you might ultimately see the price of said crypto decline. So I think there's probably better ways to play technology than the crypto. And if it is, I think you want to play with a very small portion of your portfolio.
The president's sons put out that American Bitcoin offering this week. It had a 110% bump and then pulled back about 20% yesterday, up a bit today. That's the ABTC, American Bitcoin, trading now at $7.40, up nearly $1 today. What are your thoughts on that one and some of these other names that have popped up, crypto-related, Bitmine, Bullish, and Circle, and so forth?
Well, I have to say, I think, Frank, it's a little unseemly to have the Trump family profiting seemingly so closely over legislation that the president is intimately, involved in crafting. Would never want to deny anyone his or her opportunity to make a buck, but there's some of this just seems a little bit too close for comfort for my book. But there's going to be a shakeout here. There's going to be some winners, but there's going to be a tremendous shakeout. And again, I go back to that .com era. There was, some companies did make it. I mean, eBay did make it, for example, but for every eBay, there was dozens that did not. So, what crypto looks like in 5 or 10 years, I think it's too early to tell. We're seeing this market start to kind of hash that process out. But it's an area that I don't feel as if I see any demonstrable edge. And it tends to be, Frank, well, as they say, they take the baby with the bathwater. When the paddy wagon comes, they take the good girls with the bad. So when one falls, they all tend to fall. So it'll be very interesting to see how that shakes out. And as I said, the only advice I can really give is that if crypto is part of your portfolio, make it one part of your portfolio, not the only part.
All right, you mentioned the micro-cap stocks and that ETF. The small-cap names have been rallying lately, too, and the Russell 2K small-cap index, it's usually a bullish sign when that one moves up. It has been moving up lately, right? What are your thoughts about the small caps here?
And that's exactly where I'd want to be putting money. There's a great ETF that I like quite a bit, Frank, and I do own this one. It's GWX. This is an ETF that buys small cap international stocks. So even more, even less widely known or less widely owned by most American investors. These are names that have been out of favor for a long time. It really has been a large cap paradise on Wall Street for, the better part of a decade. So a lot of these small caps trade at such small valuations compared to large cap stocks. So although tariffs are historically actually hurt small caps a lot more than large caps, I think there are raging buys right now. So I like FDM, as I mentioned. I also like GWX. That's a small cap international fund. And when it comes to mining and some of the metals, look at the copper miners. COPX is the ETF on that one, Frank. And if inflation isn't dead, and I don't think it is, you'll see those copper miners rally as well.
Any other specific places where we are putting money now and or taking it off the table?
Well, I'm taking it off, Frank, and a lot of the well-known names. I mean, I have a lot of new accounts over at capitalispig.com, and people have come in with portfolios in which they've got, 50, 60, 70, 100% gains in names like Meta or Nvidia or Adobe or other or Google. And I'm encouraging them, and of course, all of your listeners have to do their own financial due diligence, but I'm encouraging them to spread the wealth around, to truly do some diversification. That's what I'm focused on over at capitalispig.com, trying to craft a portfolio that can make you money, even if those big caps do break down, as we know eventually one day they will. So great opportunity to try to diversify out of those well-known names, because volatility, Frank, is guaranteed. I don't know what the next president's next move is or the Fed's next move, but volatility, that's something I know you can count on in 2025.
And been a lot of write-ups about this so-called social capitalism, with reports that the administration is looking to invest in other corporations, as they did with Intel, making taxpayers looks like the biggest stockholder of Intel at the moment. We're watching Intel stock hovering around 24 and change, I believe. Down 12 cents today at 24.49. And they're talking about possibly investing into defense contractors and nuclear names. What are your thoughts about this trending story?
I'm very against it, Frank. It's a dangerous precedent to be setting, and it's also dang terrible for the economy as well. Investment is something done by private individuals or private entities. And, Japan tried a lot of this stimulus as well. The Japanese started printing money and buying parts of the stock market and owning parts of the bond market. And when they got was, a multi-decade largesse and slowdown in the growth of their economy writ large. So, the most prosperous economies have always been the most free. And that free doesn't mean free to do whatever you want, but free from government intervention. So government should not be picking in winners and losers. That investment in Intel, Frank, rolls out to about $33 per American. And my guess is a lot of your listeners might say, geez, I'd rather take the $30 than to have governments owning a share of Intel for me that I won't even necessarily profit from if it goes up. So do not have government investing in private companies. This is the road to cronyism, and I hope the Trump administration reverses this decision.
Jonathan, thank you very much for capping another big week for us here. Jonathan Honig, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, author of the excellent book, Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan, we wish you a wonderful evening and a great weekend. Thank you again very much for joining us live here this afternoon.
My pleasure. Thank you, Frank.
Thank you very much. Out to the freeways now on 790 KABC. Frank Mottek here. Are you thinking about selling your house? A lot of people are these days. Well, I suggest you talk to Wedgwood Homes. Whatever your situation, whether you have to relocate, maybe you're downsizing, maybe you just inherited a place, maybe you're dealing with a tough rental property, or just feeling financially stressed out these days, as many people are. I'm here to tell you Wedgwood Homes is here to help. You should call Wedgwood Homes first. For more than 40 years, Wedgwood Homes has been Southern California's trusted home buyer, offering a faster, simpler, and just flat-out easier way to sell your house. And with Wedgwood Homes, you get a firm offer. That's right, a firm offer that you can count on. You can close in as little as 3 days, or make it easy on yourself. Close on your timeline. No need for any open houses, repairs, no traditional listing hassles. Get with my friends at Wedgwood Homes and do it now. Call for a no-obligation, all-cash offer. Wedgwood Homes, the number is 800-619-7121. Again, that's 800-619-7121. Again, 800-619-7121, or go to wedgwoodhomes.com. Southern California's trusted home buyer, Wedgwood Homes. Mottek On Money continues, 790 KABC. Disappointing jobs report for the month of August, first thing this morning, causing a pullback on Wall Street. The Dow down 220 at the bell at 45,401. The S&P 500 down 21 points from the record high achieved yesterday at 6,481 here at the moment. And the NASDAQ down 7 at 21,700. The yield in the 10-year note has plunged to 4.07%. That's good news for home buyers, as mortgage rates are impacted by the yield in the 10-year note. It looks like mortgage rates have come down some more. Taking a look at Tesla, it got a pop today as they're talking about making Elon Musk the first trillionaire in the world. Tesla shares up more than $12 at $350 and change. Taking a look at the Magnificent One, NVIDIA pulling back nearly $5 today, down $4.64 at 167.02. Intel down 12 cents at 24.49. Macy's has had a good week, up 9 cents today at 17.33. Taking a look at Bullish, one of the names that got a pop recently. Bullish up more than $3 at 52 and change. American Bitcoin up nearly $1 at $7.40. Apple down 9 cents at 239.69. Checking the cryptos now, we see Bitcoin down about 800 at 110,800 or so. Ethereum down $23 at 4,316. Solana at 204 and Doge at the moment at 22 cents. Taking a look at the volatility index, it pulled back 1% today. The August jobs report showing hiring coming in at just 22,000, a lot lower than the 75,000 that was expected. The nation's unemployment rate ticked up to 4.3% from 4.2%. And now the latest news on 790 KABC. Mottek On Money continues here, 790 KABC. Concerns among retailers especially about the impact tariffs might have on consumers as the costs start to creep into such things as groceries, home goods, and electronics. Let's talk tariffs and taxes and the whole works now and what's going on with the Fed and the White House and a lot going on. Let's bring in Grover Norquist now, the president of Americans for Tax Reform, America's leading taxpayer advocate. Grover Norquist, thank you very much for taking the call here this afternoon.
Absolutely, Frank. Good to be with you.
Wonderful to have you with us here, and I know folks are eager to hear what you have to say about all of this. First of all, the jobs report that came out today, we saw a reaction in the financial markets and concerns about tariffs and a lot going on here. Give us the frontline report there out of Washington.
Well, the challenge was the president used tariffs to try and negotiate with other countries, in some cases for foreign policy issues, trying to get India not to buy oil from Russia. India has too long during the Cold War been very supportive of the Soviet Union and not the United States, and now they're subsidizing them through purchasing oil, which if they would just knock it off for X number of months, Russia might have to come to a more reasonable agreement as the president's trying to get peace in Ukraine. So he said, okay, tariffs on you. The challenge is that tariffs and other countries as well, where the Europeans were taxing some of America's strongest, best, greatest companies, basically looting American high-tech companies. And Canada was playing the game too, and Britain. And he said to each of them, this cannot happen. Our friend Mr. Biden didn't care that was happening. The president did stand up for American companies that this can't happen and threatened tariffs. The challenge is that tariffs are taxes, and they can be used to encourage other countries to behave. But at the end of the day, a tariff on the import of something from France to the United States is not paid by France. It's paid by the consumer in the United States. So the president's, was working very hard to get some good and better deals. But while you do that, you are in fact raising costs on American consumers. And that certainly happened with steel and so on in the past when the president raised tariffs on steel. It made it more difficult for automobiles to be built in the United States because steel became more expensive. So it's rather, complicated and difficult. But I'm hoping that as the president made a lot of real progress in his negotiations, it's time to begin to take the tariffs on Americans, the tariffs at our borders, down so that consumers can do better moving forward.
All right. The other big story, of course, the president asking the U.S. Supreme Court now to quickly accept and rule on his efforts to overturn the recent lower court rulings that found most of the tariffs were not even legal. What is your reaction to that? It's been a while since we've chatted behind live microphones since that ruling. Your reaction to that and how this is going to play out now?
Well, it was always clear that the president was pushing a line there. The Constitution is very clear that all revenue measures have to start in the House. Presidents can't raise revenue. Senate can't raise revenue. Only the House, the People's House, can raise revenue. But then it requires the Senate and the president to agree. The people who founded the country, was kind of a tax revolt. It's one of the things that people were unhappy about. So they were very clear about how much power the government could have in raising taxes. So when he was delegated the authority by Congress, Reagan was delegated the authority, but remained there in negotiating, particularly with Japan, on steel tariffs and I think aluminum as well. That Congress said, okay, we say the president can do this. You could argue that is the House actually deciding, the House and Senate deciding to give the president that power. But outside of that rather narrow piece, it's hard to see how the Supreme Court would rule that you can do something that the Constitution very clearly says you can't. So it'll be interesting to see how that rolls out. They have sort of said in one of the lower decisions, well, we have until October. You don't have to take the tariffs down, so you can sort of work on that. I don't know how it will work out, but the challenge is the Constitution is very clear on who can and cannot raise revenue, tariffs, taxes, and that's Congress only.
Very interesting. We did hear from the Treasury Secretary, Scott Bessent, a few days ago, who said that appeals court ruling, in his words, gravely undermines the president's ability to conduct real-world diplomacy and his ability to protect the national security and economy of the United States. And he said filings by the president say that delaying a ruling until June 2026 could result in a scenario in which $750 billion to $1 trillion in tariffs have already been collected, and unwinding them could cause significant disruption. Can you ponder that for just a second?
It's a good question. This is the sort of thing that everybody should have been thinking about before we wandered into the road here, because there's traffic. It is not. If it was easy to do this, Democrat, or if it was constitutional to do it, Democrat presidents would have been doing it all day. As they worked on it. So we'll see how the court does it. I mean, sometimes this court says, well, we don't like something, but we'll give it some time anyway. There was the Supreme Court justice who said, well, affirmative action, racial quotas are wrong, but let's go another 20 years to think about it. I'm not quite sure they'll extend it 20 years, but the president has shown that he can use that power for foreign policy issues. It is an interesting question because the Constitution is so clear. It's just a little difficult to. You can make the argument for why maybe they should have written it differently, but right now I don't see how the court could do anything other than say that in most cases you really have to go to Congress. And by the way, the president can make the case, and you go to Congress. He just got Congress to pass the tax bill that he wanted. This does not mean you can't have tariffs as a negotiating tool. It just means the Congress has to start the process in the House.
Very interesting. And one other thing that's caught our attention here, Grover, your latest op-ed in the Daily Caller laying out a variety of tax cuts contemplated these days. Can you give us some good news here and what's being talked about there in Washington?
Oh, absolutely. First of all, the president's tax bill and the Republican tax bill that was passed was made permanent. Big deal, very big deal, because it's a lot of good policy, but it's also made permanent. So we don't have to go back. It won't disappear in 5 years or 10 years and we have to relitigate it or pass it again. Now, there is another opportunity in the fall, in November. And probably one in the spring as well. You can legally do 2 more reconciliation packages, just like the Big Beautiful Bill. Same rules, all that. And the House and the Senate are working on that now. The president's made some suggestions. They're looking at things such as getting rid of the tax on inflation when you pay capital gains. I talked directly to the president on this. It was something recently, but also 8 years ago when he was president, he wanted to do this in 2019 and came close, but it just didn't didn't end up happening, you can do it by, in effect, executive orders, by a rulemaking in the Treasury Department. And the Treasury Secretary has spoken well of this approach. What it would say is when you buy a house and you sell it, and maybe your house went up $1 million, but the 2/3 of that's just inflation over the last 50 years. Is it really fair to tax somebody on 2/3 of their gain? It's only inflation and treat it as if it was real income. Instead, it says, you know what we'll do? Take out the part that was inflation. Only the part that's a real gain will there be a capital gains tax on. When you sell a house, when farmers and ranchers sell their property, you have a lot of property. That's a lot of money you could make in 1 year, but that's 1 year in your life, right? It's not every year. This is and why should you be paying for Jimmy Carter's inflation, Biden's inflation, stocks and bonds that you own for a long period of time, inside a mutual fund, an EFT and singly? It would tremendously increase the ability of people to take their property, their earnings, and to move capital around. Say, I don't want a big house anymore. The kids are grown up. I'm going to sell the house, not pay a humongous amount of money for the taxes, I'd pay something on capital gains, and then I'll buy a smaller house, and then I've got this other money to live on or to invest. Maybe I want to go invest it in the market. If I've
Absolutely, Grover. Well, you raised some great points as always. Grover Norquist, president of Americans for Tax Reform. Be sure to check out his latest op-ed in Daily Caller. Grover, have a wonderful weekend, and again, thank you very much for joining us live here this afternoon.
Thank you.
Out to the freeways now, 790 KBC. Frank Mottek here. I've been out to a lot of business events lately, and a lot of questions coming up about whether people should sell their house. A lot of people are thinking about that, and if you are, I suggest you talk to Wedgwood Homes. Whatever your situation, whether it's you're relocating urgently, maybe downsizing, maybe you just inherited a place, or dealing with a tough rental property situation, tough tenant, or just feeling financially stressed out, I'm here to tell you Wedgwood Homes is here to help you. Now, you should call Wedgwood Homes first. For more than 40 years, by the way, Wedgwood Homes has been Southern California's trusted home buyer, offering a faster, simpler, and really flat-out easier way to sell your house. With Wedgwood Homes, you get a firm offer. That's right, a firm offer that you can count on. You can close in as little as 3 days or close on your timeline. There's no need for any open houses, no repairs, no traditional listing hassles. Get with my friends at Wedgwood Homes, and you can do it now. Call now for a no-obligation, all-cash offer. Wedgwood Homes. The number to call, 800-619-7121. Again, that's 800-619-7121. 800-619-7121. Or go to wedgwoodhomes.com. Southern California's trusted home buyer. Call now, 800-619-7121. Mottek On Money continues, 790 KABC. Good afternoon. Corporate merger activity is being picked up lately, and so is the entrepreneurial spirit. Let's bring in a giant now in the local M&A scene, as well as a master entrepreneur. Joining us live now is Lloyd Greif, the CEO of Greif & Company Investment Bank, in fact, known as the Entrepreneurs Investment Bank right here in Los Angeles. It's also Lloyd Greif's name, which is on the Lloyd Greif Center for Entrepreneurial Studies at the USC Marshall School of Business. Lloyd Greif, thank you very much for coming to the line here this afternoon.
My pleasure, Frank. How are you, sir?
Wonderful to have you with us. It's been a while since we chatted behind live microphones, and it was wonderful seeing you at the EY Entrepreneur of the Year Awards for Greater Los Angeles recently, where the entrepreneurial spirit was celebrated. In fact, you were one of the judges for that important competition. Give us your thoughts on the entrepreneurial scene here in Los Angeles at the moment.
Alive and well, thriving, I would say. It's supported, obviously, by the great institutions we have locally, UCLA, USC, Claremont, JPL, you name it. But you've also got, in terms of the infrastructure that we've got local, you've got the Chamber of Commerce, you've got the LA EDC, you've got a variety of banks and investment banks that have major presence here in Southern California, and, of course, private equity firms and venture capital firms. So a nice ecosystem to support entrepreneurship.
That's terrific, and you're on the front line of M&A activity as well. Given the current environment, what do you see ahead for mergers and acquisitions here?
Well, we've had some pretty big ones locally, right? You had Paramount Global get acquired for $8 billion. You have Skechers, which will be closing its transaction next week at $9.5 billion. So those are pretty significant local M&A deals, but they run the gamut here. So we've got giants, and then we've got much smaller middle market and emerging growth companies, all trading hands. So it's been a decent year for M&A. It's not a record year by any stretch of the imagination. It's roughly even with last year's pace, but I would call it steady as it goes. Transactions do seem to be edging up in terms of size, and that's a good thing. And I think that private equity is beginning to get back into the game. They've been on the sidelines a while because there'd really been not a strong not a strong M&A market, and there hadn't been a strong IPO market. And the IPO market window is beginning to thaw out. IPOs are quite a bit up year over year, about 85% so far through September year to date. So that's positive. And once you have an IPO market where private equity firms can exit and get liquidity on their investments, you'll see it trickle down to M&A transaction activity picking up as well.
Very interesting. And in recent weeks, we heard from Tim Cook talking about maybe we're adding the speculation that Apple might be interested in acquiring an AI-related company, and one name has been mentioned. Are you seeing a lot of that thinking these days? Companies trying to connect with A&I, and no conversation is complete without bringing up AI these days.
No question that technology is driving the activity that we're seeing currently. Particularly from a public offering perspective, but also from an M&A standpoint. I think AI is the byword at this point. About 75% of the technology M&A deals that were completed year to date in 2025 had some form or another of an AI-related component. So it's a sizzling hot industry, and it's going to get hotter for, I would say, at least the next 12 months.
On there live with Lloyd Greif. And what's your gut feeling on this economy? We did get that jobs report this morning, which came in a bit disappointing. Inflation's still relatively tame, but worries about tariffs and so forth. Obviously, L.A. is dealing with big issues on the recovery and all that. What's your gut feeling on the economy at the moment?
That's the one wrinkle in the forecast. I would say because of the erratic nature of the policies that the president's handing down, particularly from a tariff perspective, and who knows what's going to be allowed to stand and what's going to be knocked out by judicial action. But that is the one area where things could get off the rails. Expectations right now are that we're going to have a gangbusters 2026 for IPOs, and that M&A activity will resurge as well. But with the economy being as choppy as it has been lately, there was actually a reduction in the labor force in the restated numbers for June, I think for July actually, and then the most recent release indicating very disappointing growth.
Lloyd Greif, thank you very much for that thorough assessment as always. Let's do this more often. I know you're very busy, but let's try to get this connection as often as possible. Lloyd Greif, CEO of Greif & Company Investment Bank, known as the Entrepreneur's Investment Bank, and his name is on the Lloyd Greif Center for Entrepreneurial Studies at the USC Marshall School of Business. Live with us here on Mottek On Money on 790 KABC.
Headed to SoFi Stadium? Skip the traffic and ride the Culver City Bus Line 99, the SoFi Express, your direct $2 base fare round-trip ride from the Culver City Transit Center at Westfield, Culver City. Buses run on weekend game days every 20 minutes starting 3 hours before kickoff, with return service beginning at the start of the third quarter. And guess what else? We're hiring. Join our team and help keep the community moving. Visit culvercitybus.com or call 310-253-6500 for info on your next ride to the game or maybe your next job.